Hello everybody, my name is Christian Charlo. Welcome to this market report. Today we're Tuesday, June 17, 2014. Today folks, I want to talk to you about a movement in the financial sector. Let's take a look at the financial sector here in the US. We see the sector now is still in a neutral cycle, but on that neutral cycle, though, on that slight increase within the side formation, there have been a lot of stocks which have started to break out. And today, I'm going to show you the list of the best breakout that we have today on the financial sector. We actually have a subsector, the investment services sector, which is clearly breaking out. So to trade that movement in the financials, because now we see it's a neutral cycle, but if the bullish momentum that we see throughout the stock continues, we could see the financial sector starting a bullish cycle. So if you're not comfortable in buying some stocks, you could also trade it with some ETF, like XLF is the ETF that you could have, that you could trade to actually benefit from a potential continuity of the bullish momentum in the financials sector. Now, 2243, this is where a stop loss will be, because at 2243, XLF will clearly reverse its downward trend. So it's a first movement, and there might be some potential there if ever we see a continuity of those breakouts. What are the breakouts today? Here are they. We have MetLife, Manulife. It's also on the TSX too. So those of you who like to favor the TSX market, you could also favor that. Of course, in Manulife, it's breaking out. Of course, there's a resistance that's there. You cannot make a 10% since that resistance, which is around 1962. But still, it's today that we're giving an entry point on Manulife though. So that resistance at 1960 could be broke out if ever we see a continuity of the bullish momentum on Manulife. We have Lazard that is making an all-time high, so a stock like that could be more favored for those of you who don't like when a stock has a resistance. So I think Lazard could be a good buy. Northern Trust for potential until 66. On Northern Trust, you have a 62 where your stop loss should be on the break of that support. Goldman Sachs, a clear breakout there. So Goldman is definitely in a nice, clear upward corridor. So it's giving a clear entry point in Goldman Sachs. We could have a stop around 170 for Goldman Sachs. So this is actually the target that you have in that trade. Charles Schwab, what I like with that stock is that it's clearly getting out of a important upward corridor. So finally we have this movement, and I think today Charles Schwab's represent definitely a great opportunity. Actually on marketgurus.tv, out of those many breakouts, we're going to pick the best picks of the day. So on marketgurus.tv, you can have access to that for free for 10 days just by clicking at the link below of marketgurus.tv. And we have actually E-Trade Financial, which is clearly breaking out, clearly reversing its downward trend, just like Charles Schwab. So same technical pattern on those two stocks. For E-Trade Financial at 20 bucks, this is where your stop loss should be. And there are a list of some stocks that should be watched for an eventual breakout. I'm going to show you the list here. All the ones you see highlighted with an I are stocks that you should watch for an eventual breakout. The ones highlighted with an S are stocks that are already breaking out in the financial sector. And today, even if the sector is starting a neutral cycle, if ever the stocks you see highlighted with an S are pursuing their bullish cycle, the ones highlighted with an I might start a breakout though. So those stocks definitely have to be put on your watch list for an eventual breakout if ever the momentum continues on the financial sector. So this was Christian Charlo from marketgurus.tv. See you next week for your market. Oh, actually next week I'm not going to be there. I'm going to be on vacation, but see you in July when I'm going to be back for your next market report. Take care folks, and have a good trading.